Welcome to Markets Now. I'm Michelle Rook along with Chip Nellinger, Blue Reef Agro Marketing, and a lower day in all but the cattle market. And let's talk about grains first off. Another risk-off day there, kind of weighing on those grain futures, Chip.
A risk-off day. It's kind of a risk-off week in the financial markets. The stock index futures ran out of gas in here. We've seen a big correction lower in crude oil prices. Really, just fears that the Federal Reserve is going to continue to raise interest rates in their May meeting, maybe 25 more basis points, and that kind of has the financial markets pulling some premium back out on fears of a continuing recession or slowdown in the economy.
Yeah. Did we also see some profit taking in corn and soybeans, at least in the old crop contracts, after we kind of hit some chart resistance or not?
Yeah, for sure. We've had a nice run high. I mean, if you look at the new crop chart on corn or beans, you're like, well, we're going nowhere. We're down near the recent lows. But if you flip back to old crop, particularly the May contract on corn and beans, we've had a tremendous run. The bull spreads have worked, and we did hit some, technical chart resistance. So likely we did see, some profit taking here today, especially following up that some profit taking yesterday, and the bull spreads corrected a little bit as well. Its basis is so strong, it feels like both corn and bean, old crop stocks are really tight right now. So I don't know that this is just, something to, worry tremendously about with a big sell-off, but nonetheless, there's kind of a lack of a bullish spark right now.
Yeah, and we've had those inversions in both corn and soybeans. How do those play out now, especially as we get into, I think, option expiration tomorrow, and then you've got first notice day coming up, next week?
Yeah, it's going to be really interesting. A lot of people scratching their heads wondering the same thing. A lot of times this isn't a 100% rule, but a lot of times when a contract goes off the board, the next contract goes up or drops to where the previous contract went off the board. So if that's going to be the case, then you would expect the July corn and bean contracts might have some room to the upside based on where the May contracts are trading. But it's going to be an interesting process here as we get into first notice day, and those spreads. I don't think we've seen the last of the bull spreads. That should continue all the way through summer until we get closer to new crop supplies.
And just looking at new crop independently on both corn and soybeans, we went down, tested some pretty good support areas, but are those going to hold longer term? Is there more downside risk, do you think?
Yeah, there very well could be. I don't think you can get too nervous or fearful yet. This is a time frame on the calendar here, late April into the first half of May, that it's really hard for the grain markets to do much. Even though there's less than ideal planting conditions out there right now, we can just with the planters and the capacity we have now, we can get a crop in very fast. So it's hard to play up a planting delay. The market knows that. There could be some further downside, but I guess I wouldn't panic just yet. We've got the entire growing season ahead of us.
Yeah, we don't really put in weather premium until you get at least into May, right?
Typically, you put a bot, and actually this time of year, like early April to mid-April, is when you kind of put a temporary top in, kind of your spring top. Okay. Then you typically sell off into May and then add some risk premium back into the markets in June and into July if it stays hot and dry.
You bet. Exports this morning as well on corn and beans were a little bit lackluster.
Yeah, they were. Still positive in beans. I guess that's a take-home. You've got a massive crop in Brazil, and we haven't seen any of these weeks where we see big cancellations or switches. So, typical this time of year when Brazil has supplies hitting the market, but still wasn't anything to really get the bulls enthused this morning.
Yeah, and Brazil's prices are a couple bucks under ours right now, aren't they, on beans?
Yes, they are. So again, the fact that we're still in positive territory, although it was at the low end of expectations, really I think is bodes well in the case of bean demand. But unfortunately, we're going to have that fight with cheaper Brazilian supplies for some time to come.
So the wheat market didn't do any favors to corn or for corn or soybeans either. But the wheat market, what was the problem there? Was it just these rains in the forecast, or was there more to it?
Well, I think it was mostly the rain in the forecast. I don't know that it's going to really do anything at this point to help. It's almost insult to injury. Those wheat producers, Kansas, Oklahoma, Panhandle, Texas, just it's been a brutal couple of years for them. So I think, the wheat market being the wheat market, you just needed one little excuse, a hint of some rain, and they pulled some risk premium back out. The outside markets probably didn't, help either. Sure. And I do think that was, probably a big issue with the corn market today as well, with the heavy selling you saw in the wheat.
Absolutely. Cattle market. We started off lower there, kind of got caught up in the risk off, and then we bounced. Do we just hold support, or do the traders not want to let the futures get too far into this cash trade?
Yeah, even though cash is going to be a little bit lower this week, we corrected the April. It can't get too far below where the cash market is. And then you look out to the Junes, and they're way behind here. So I think that is going to be something that gives us support on the breaks. That we'd had a huge run higher. Cash was higher for multiple weeks in a row. So you knew at some point we're going to pause this cattle market. I think it's probably healthy longer term. Once you get the April off the board, I think that the Junes have some room to the upside.
And the feeders, we actually scored some new contract highs again in the back months. Sounds like the cash market's pretty much on fire out in the country right now.
Unbelievable. And there have been some improvements, obviously, in some areas of the northern plains and that kind of mountain area. So maybe you're seeing some people kind of get some feeders back out on some grass that they haven't had for a while. But certainly it's going to be an interesting summer with the way these spreads are. And the feeder strength, especially if corn would to correct a little bit lower, that's just going to add some fuel to the bullish run in the feeders.
Yeah, and the lower corn market today probably did fuel that rally a little bit as well. And then the hogs. Okay, new contract lows yesterday. We reverse off that, but no follow through today. And then we score more new contract lows. What can we say about that?
Yeah, it's just frustrating. I thought yesterday just maybe we'd finally seen a bottom, but we just can't turn the corner. We've got to get the cash market and the cutout stabilized, and we're just having a hard time doing that. We're killing too many hogs. There's more out there than what the market expected. And until you can kind of stabilize and bounce the cash market, unfortunately, I think every rally is going to continue to be sold. But the funds have a massive short position, relatively speaking, for the hog market, and it wouldn't take much to spark them out of that and put a nice run into later this summer time frame.
Yeah, I was going to say, with them records short, if we get a short covering rally, it should be a pretty good one. All right, thanks for joining us.
Thanks.
Chip Nellinger, Blue Reef Agri Marketing, and that is Markets Now.